Thanks for joining us here on Market Call. I'm Morella Fernandez. Rick Rule will be on the show today. He's president and CEO at Rule Investment Media, and we'll be taking your questions today on natural resource stocks. Here is how to get hold of us. If you want to call in, 1-855-326-6266. If you prefer to email a question in, you can do that as well. marketcall@bnnbloomberg.ca. We're just getting set up with Rick. In the meantime, let's have a look at the North American markets and see how we are faring so far on this Friday. The TSX rebounding 335 points up, 1.4%. After yesterday's drop of more than 200. The S&P also up today by 106 points, or almost 2%. And the NASDAQ at this hour up 413 points, or 2.4%. Remember, the S&P was in correction territory yesterday, meaning it fell to that under 10% between the high and what it closed at yesterday. So it was in correction territory. We're watching that rebound today. People having a little bit more, I guess, confidence in markets, which have been jittery. Investors have been jittery, of course, with all the trade tariff war going on, the back and forth rhetoric between Washington, Ottawa, as well as China and Europe involved with that. So gold also reaching an all-time high of $3,000 an ounce. That happened in the early market hours of the day. That's something we'll talk about with Rick Rule as well. So a lot to go through here on the show. We'll take your questions again, both through phone and email, as we take a look at the Canadian dollar and see where that landed at this point. Okay, Canadian dollar still under the 70-cent mark, 69.54. It's been waffling in that range for a while now. Of course, again, on all the rhetoric going back between Washington and Ottawa. And yesterday, of course, was the meeting with our finance minister, and the Ontario premier went down to Washington to talk some of those issues out. All right, Rick is ready to join us, and he joins us now to talk some more about everything that's been going on. Rick, thanks for your time. Look, gold we spoke about surpassed $3,000 an ounce. What does that say to you about investor mindset right now?
Well, gold in my career has done well when people are concerned about the maintenance of their purchasing power in fiat currency denominated instruments. Clearly, the world's reserve currency, the U.S. dollar, is challenged by a few things. Nervousness about impending trade wars with virtually everybody from the U.S., but also concerns about ongoing debt and deficits. Many people focus on the on-balance sheet liabilities of the U.S. government, which of course exceed $36 trillion, without paying too much attention to the net present value of off-balance sheet obligations, Medicare, Medicaid, Social Security. Those numbers exceed $100 trillion. The ability to fund those nominal obligations suggests that over time, the U.S. government is going to have to resort to printing, which would not be good for the U.S. dollar, but which would be very good for gold.
Okay, let's talk about whether or not you would still buy into gold, considering where it is. You think that the ongoing trade war, and we don't know what's ahead, will still have people buying into it, or do you think people can wait for a bit of a drop if they are thinking of buying in?
I think that people who own it and people who are traders can wait to increase the size of their position, but it's very difficult for me to understand why anybody wouldn't own physical gold as insurance. The arithmetic, particularly around the U.S. dollar, given the debt and deficits and given the political dysfunction in the United States, suggests that anybody who's prudent, who understands gold's traditional role as insurance, would want to be involved in gold, if only for insurance purposes. I know it sounds perverse, but I would suggest that people buy it and pray it doesn't go up.
Okay, we do have to take a quick break as we line up some phone calls, Rick. So let's hang on for a moment as we show people how they can get hold of us. Rick Rule, the guest today. Your questions on natural resources. We're back in a moment. Welcome back. Thanks for joining us today. Happy Friday to all of you. Let's go right to the questions for Rick Rule. This first one comes from Alan. Alan says, any views on one-year prospects for Equinox Gold? Rick, what's your take on the one-year prospect?
I think in the very, very near term, Equinox may trade off as a consequence of Caliber shareholders. Equinox is acquiring Caliber, selling because they've achieved their goal. Looking over the course of a year, my suspicion is that their Canadian operations will ramp up and they'll do very well, generating more free cash. It's also worthy to note that larger companies generally enjoy higher trading volumes, hence lower cost of capital. The size of Equinox now, having acquired Caliber, means that they will likely be included in more equities indexes. And so my suspicion is that the company will perform well over the next 12 months.
Got it. Okay, let's go back to another email. This one from Steve in Kelowna, BC. He says, what are your views on Erdene, Sprott, and Teck?
I am not a shareholder of Erdene, but the fact that Teck in particular is a shareholder speaks well for it. For those who don't know, the company is exploring for and perhaps developing copper gold porphyries in Mongolia, and the affirmation of the Teck shareholding makes a difference to me. I should note, however, that I don't own it.
Okay, and Sprott?
I'm sorry.
I misread that, sorry. Let's move on. We do have Tom on the line. Tom is calling from Collingwood, Ontario today. Tom, what's your question?
Rick, thank you very much. You did a free portfolio analysis for me last fall, and I've changed things, and everything has really turned out great. My question, I'll talk fast. Gold can be up, let's say, $30 overnight on the Asian market. North America opens at 9:30. A lot of times by 11, 1.5 hours later, it has lost all that gain. Is it because the big institutions, and you know who they are better than I do, are driving the price down to cover their shorts? I'd like to know your answer to that. Thank you.
Okay, Tom's been watching things very, very closely.
My suspicion would be that Asian retail buyers and, of course, the Chinese central banks are much more aggressive purchasers than they are in North America, and they are inclined to support their own markets, which is to say the Shanghai market. I am not particularly a believer in any long-term effort to suppress the price of gold. I understand that all markets, even including the euro-dollar market and the euro market, are manipulated in the near term. But I would generally look at disparities in prices among markets and explain them away by the relative attractiveness of the commodity in various cultures. The Asians have been the predominant buyers of gold for the last 3 years, so it makes perfect sense that during periods of time when the Asian markets are open, particularly because the Chinese prefer the Shanghai exchange, that exchange is one where there are more buyers than sellers, and our exchange is much more evenly balanced.
Thanks for answering that question. We will move on to Deborah, who's calling from Okanagan Falls today. Hi, Deborah.
Oh, hi. Thanks for taking my call. Hi, Rick. My question today is on Rio Tinto. It's got a nice dividend yield of about 6.4%. My question to you today is, do you see this pushing past the 52-week high? And my secondary question is, Rick, how much cash weighting are you actually carrying in the portfolio during these, what I say, arduous times?
Okay, so Rio Tinto down about 22% over 3 years, Rick, is what we're looking at.
If one believes that the iron price doesn't fall any further, understanding that Rio's cash flows are iron-centric, then Rio is a pretty decent buy here. For people who believe in my natural resource thesis over 5 years, you have to own Rio. If you have a shorter term time frame, you need to pay attention to the global economy, but particularly the Chinese economy. Note that I own Rio. I've owned Rio for many, many, many years, and I'm much less concerned about increases and decreases in the 20% range, and much more concerned about, A, the dividend and the sustainability of the dividend. And that is very, very, very high. So I think with regards to Rio, it matters less about Rio and more towards the individual investor. I have to own it because I'm an investor in natural resources, and I believe in the thesis, and I am unconcerned about even 20% perturbations in price. I'm much more concerned about long-term value. With regards to cash, I have too much cash in my portfolio. I am, as a consequence of some dispositions, very, very, very cash heavy. I normally try to run 10 or 12% cash in my portfolio, and I'm much higher than that currently.
And that is a recent change for you?
Really over the last 12 months. I have made some investment decisions that have worked out fairly well, including some very long-term decisions. And I haven't been able to redeploy all the cash in circumstances that are as attractive to me as I would prefer. I'm comforted by the fact that that inability to redeploy is also shared by Warren Buffett.
I was going to ask you if you were pulling some money to keep aside, as some people are suggesting we do, given the times.
Normally, I have 10 or 12% in cash or bullion because I do believe in liquidity. The truth is that cash gives you the tools and sometimes the courage to take advantage of difficult market conditions rather than being taken advantage of by them. But in direct response to the questioner's direct response to the question, for my own purposes, my cash holdings are too high currently.
All right, let's go back to the phones. Elliot's been holding on the line from Hamilton, Ontario. Hi, Elliot.
Good afternoon. Please, may I have your assessment of the company and stock for Oceana Gold? Thank you.
I don't own Oceana, but I think that Oceana is the kind of gold company that likely does well in the next 2 years. The very large cap gold companies have done extremely well. The mid cap companies have done less well. My suspicion is over the next 1 or 2 years, either the share prices of the mid cap companies like Oceana, like Equinox do well, or they'll be taken over by larger companies or engage in horizontal merger. Scale matters in equity markets today. So much of the market is driven by passive buying that mere size and inclusion in index is good for share prices. So either Oceana Gold does well as a consequence of increased free cash flow from higher gold prices, or Oceana Gold gets taken over. Both circumstances are good for the shareholder.
All right, Rick Rule, we do have to take a break so we can line up some more phone calls. Rick is the president and CEO of Rule Investment Media. He'll take your questions today on natural resource stocks. We're back in a moment.
Making sense of business and the economy can be tough. We dig through the details to tell you what you need to know with straight talk and expert analysis so you can make informed decisions about your future.
Taking Stock, Fridays on BNN Bloomberg.
Welcome back to Market Call, and thanks for joining us today. Let's go right back to your phone calls. Mary is holding on the line from Burlington, Ontario, with a question for Rick Rule. Hi, Mary.
Hi, Marilla. Hi, Rick. Thanks so much for taking my call. Rick, I'm wondering what you can tell me about Ecora Resources. Thanks very much. I'll hang up and listen.
I'm a shareholder of Ecora. They've been involved for some years using the free cash flow from extraordinary coal royalties in Australia to diversify their royalty base. They are running out of room, I would say, with regards to the coal royalty, but they've done a very good job redeploying the cash. The coal royalty is effectively valued at zero because of the political incorrectness of coal. However, it generates substantial free cash flow. Ecora is another company, sort of like Equinox, where given the attractiveness of the royalty business, either the share price goes up or Ecora gets taken over by a different royalty company. In either circumstance, over the 1 year, 2 year, 3 year periods, shareholders of Ecora do well. Note that the free cash flows in the royalty business are very strong because you don't have operating costs and you don't have capital costs, so that the cash flow that you enjoy is very often free cash flow. And it looks as though Ecora is in for a period of revenue growth, which would suggest pretty dramatic free cash flow growth.
And Ecora is out of Australia, Canada, and South America?
Ecora listed in London, Australia, and Canada.
Got it. Let's move to an email now from Terrence. Terrence says, I would be interested in hearing Rick's opinion on Vale.
I am no longer a Vale shareholder. I may become a Vale shareholder. It is cheap, but I was waiting to see what the outcome of the penalties that they face in Australia for a catastrophic tailings dam failure. Those are in the market now, but I haven't done the discounted net present value analysis on Vale. Canadians know Vale because of its operations in the Sudbury area. But the truth is that Vale is mostly a Brazilian iron ore company. Iron has been fairly weak recently, but despite that, Vale generates substantial free cash from their Brazilian operations. Note, I do not currently own Vale.
Sorry, when was their incident in Australia?
in Brazil about two and a half years ago. And it was
2.5 years ago.
catastrophic.
Okay.
In excess of 50 people were killed in that circumstance. And it would appear that it was a preventable circumstance, too. The Brazilian courts have now assessed the fine on Vale and their joint venture partner, BHP. And I've been remiss not doing net present value analysis on Vale after the award.
Got it. Okay, let's go back to the phones because Dave is on the line. He's calling from Celesta, BC. Hi, Dave.
Hi, good morning. Thanks for taking my call. Rick, I was wondering, Silver Line Gold Corp, I bought that a while back. I was on some message or advice I got over the TV from you. It's got up substantially, but I read reports on the and they're finding gold right next to the top. It means the gold is very close to the top, and they're in pretty well don't have to strip it. They just dig it and take it right to the crusher. I just wondered, do you have any idea when this thing might turn into a gold mine? It's supposed to be one of the largest gold projects or properties in Canada.
The good news here is that this is a profound deposit, a really important deposit. I think it will easily exceed 10 million ounces, and there is a high-grade starter pit. More good news is that in the summer season, the news flow is going to increase. The bad news is that this is no longer a microcap. This is a pretty decent company. And the deposit is extremely remote. We're coming into the boring period where you go out of exploration into delineation. So really, whether or not you want to hold the stock, buy the stock, or sell the stock and take profits, depends on you. This deposit will go into production, likely not by Snowline. A 10 million ounce deposit in Canada with a high-grade starter pit with very high upfront capital costs, given where the deposit is, will almost certainly be built by a major mining company. Will the takeover occur this year? Unlikely. Will the takeover occur next year? Unlikely, because they have to de-risk the project. But the project almost certainly will be taken over, and it almost certainly will be taken over for a price higher than today's price. Whether a holder can take the volatility or whether a holder has the patience for the time it's going to take for a resolution is a different question. I own the stock, and I will own the stock until it's taken over by a larger company.
Got it. Okay, let's go back to the phone line to Mark on the line from Gatineau in Quebec. Hi, Mark. What's your question today? Mark, are you there? Okay, we may have lost Mark, but his question was about Bear Creek mining.
For those who really like leverage to the silver business, like my old mentor Eric Sprott, this is a decent company. In the very near term, they tried to move into production, and they've really been decimated. This is a very tough balance sheet. It's a company that's having a difficult time with their existing operations, and the negative cash flow from the operations threatens to pull their exploration business through the floor. I do not own Bear Creek, and I'm very nervous about their going into a business, which is to say production, that was very different from their expertise, which was exploration.
Okay, we do want to get another email before we have to take a break. So let's get in this email from Barry in Vancouver. He says, could you ask Mr. Rule what his opinion is of Regulus Resources and their late-stage exploration project, which is happening in Peru? What's going on there? What are they finding in Peru? What are they pulling out of Peru?
I'm a fairly large shareholder of Regulus, and I'm a very big fan of their management team, having made money with them in the past. I absolutely believe that the project in Peru will be a mine. There are ongoing regulatory and ongoing capital challenges. I suspect that the stock will be up and down, but I suspect it'll be much higher over the next 3 years. As I say, I am a fairly large Regulus shareholder. The stock has treated me extremely well. And I continue to hold because I think that most of the news over the next 2 or 3 years is good. This will require patience, and it will require the holder to endure a fair bit of volatility. That's the way these things work.
It took a bit of a spike, I guess, late last year from looking at the line chart. So what happened late last year?
A couple things happened. They achieved a regulatory breakthrough, and they achieved a breakthrough with a sort of a joint venture partner, an interest holder across their property line. They had two pieces of very good news. The other thing that happened, of course, is that the copper price has done fairly well, and the gold price has done very well. So the constituents, the value constituents of their deposit, have performed well in the market.
All right, Rick, we're going to leave it there for now. But when we come back, we're going to take a look at our guest's past picks. That's coming up next. Thanks for joining us on Market Call. Rick Rule is here to share with us or answer your questions, but also share some past picks and forward-looking picks. Past picks first, of course. We were looking at May 31st of 2024, so not a year ago, but your first pick at that point was Dundee Core. And at the time you recommended it, it was 137. It is now up to 194. I think it might be even a little bit higher today. 42% return, 42% total return. At the time, what was going on with Dundee?
I like the fact that Dundee is, in effect, a merchant bank. They use 50 years of expertise in natural resource capital markets to assist other companies in achieving their goals and, of course, monetize their success. The process that attracted me to Dundee was their successful stewardship of Reunion Gold to a takeover by G Mining, and I looked forward to them repeating the process again and again. For many investors who like to be in the juniors, who do insufficient due diligence themselves, simply buying Dundee Corp and participating in the process of merchant banking and natural resources is a better way to own the natural resource space. It's like owning a mutual fund that has the potential to pay you a dividend as opposed to charging you a fee. I continue to be a very large Dundee shareholder, and I suspect that the size of my position will grow over time.
Okay, it looks like they're up to about 197, 198 so far today. Let's take a look at another of your past picks, I-80 Gold. We'll bring that up. Recommended at the time at $1.09. Now it's dropped to 70 cents US, so minus 35% at this point return and total return. What happened in the last year or so with this company?
Overly aggressive and took on too much debt. The balance sheet pulled them through the bottom. I need to say, sadly, I am no longer an I-80 Gold shareholder. I suspect that there's going to be a fairly major refinancing, which, depending on the price and terms, I may participate in. I am no longer a shareholder of I-80 Gold. I like the management team. I like the assets. I do not like the balance sheet or the income statement.
Okay, let's move on then to Bravo Mining, which was your third pick from May of last year. At the time, it was recommended $3.80. It's now dropped to $2.19, so 42% return, 42% loss there for total return. Tell me about Bravo Mining.
World-class deposit in Brazil, PGM deposits. PGMs are out of favor. Nickel, the co-product, is out of favor. I have become a much larger Bravo Mining shareholder. They've enjoyed spectacular exploration success, both in terms of the primary deposit, which is a PGM deposit, but also a potential iron oxide copper gold deposit. I have taken advantage of the share price and decline in Bravo, which I think is more related to people's disfavor with platinum than anything else, by becoming a larger shareholder.
And you think down the road it will pick up?
I do. I believe that the platinum price picks up over 5 years, but I also believe that investors like myself owe it to their personal balance sheet to buy tier one deposits when they're out of favor. This will clearly be a greater than 10 million ounce platinum deposit, and there may very well be an accompanying iron oxide copper gold deposit. This is an absolutely world-class deposit that the market's bored with, and there's nothing in the world I like quite as much as tier one deposits that other people are bored of.
Okay, so you would still recommend it at this point?
Absolutely, for those people who are patient, which I am.
Got it. Okay, Rick, we do have to take another break. We're going to come back with more of the questions for Rick on natural resource stocks. Back in a moment. Welcome back to Market Call. Rick Rule is our guest today, and he joins us to take your questions on natural resource stocks. Bruce is on the line from Vancouver Island today. Hi, Bruce.
Hello, top of the morning to you from Vancouver Island. Just love to get Rick's thoughts on B2 Gold. They've had some cost overruns in their new mine up in northern Canada, but they should be starting to pour in the next few months. Love to get his opinion. Thank you so much. Have a good day.
Thank you. Rick, go ahead.
I'm a B2 shareholder. I'm a longtime fan and friend of Clive Johnson, the founder and CEO of the company. As the caller suggests, they are behind schedule and over budget in a mine in northern Canada. If they resolve that successfully, I suspect the stock to be not merely higher, but much higher. The rest of the company is in fairly good shape, although the stock has been punished as a consequence of the fact that their main producing asset is in Mali, and there's been a lot of political turmoil in Mali around the mining business. Note that Clive Johnson and his team solved their own political dispute in Mali peacefully, something which very few other companies have been able to do. Assuming that the Canadian operations come in at nameplate capacity, B2 is extremely cheap from a sum of the parts point of view, but there is, of course, completion risk. This is a very remote location where supplies need to come in the winter over ice roads, so it's logistically challenged.
How big is that? Sorry to interrupt you. How big is that risk? You said there's a completion risk.
There is a completion risk, and it sounds tough to say. You're not going to understand the nature of the completion risk until you've completed it. They are behind schedule. They are over budget, not uncommon in remote locations. My belief is that the market has overstated the risk because this team has done remote location construction in the past.
Got it. Okay. We hope that helps Bruce out as we move on to David calling from Welland, Ontario. David, what's your question for Rick today?
Hi, Rick. My question is on Mega Uranium. I'm down a little bit right now. Would you consider it a hold or sell for the next 12 months? And what is your overall opinion of the uranium market for the next year? Thank
I love the uranium space, particularly because the stocks are down by 50%. In consumer goods, if prices are down by 50%, it's called a sale. It's weird that people don't regard financial assets the same way that they regard physical assets. Mega is a sum of the parts play. If you look at what they have in them, particularly their shares in NextGen, they're selling at a substantial discount to liquidation value. I love that sort of thing. And I love the uranium sector. The long-term outlook for the uranium sector is good. But the truth is that most of the people who hold uranium don't know very much about it, and they're bored. There's nothing I love more than hate. And uranium is hated.
Why is uranium hated, and why do you love it?
I think people had overblown expectations about the uranium market 3 years ago. The narrative hasn't changed, but circumstances that take 5 or 6 years to play out do take 5 or 6 years to play out. Many investors have the right narrative, a 5 or 6 year narrative, but they have 2 or 3 month strategies. That mismatch between investor strategies and the time necessary to realize their investments often exhausts their patience.
So patience required. All right. We hope that helps him out. We're going to move to Kevin, who's calling today from Calgary. Hi, Kevin.
Oh, hi there. Hi, Rick. Would love your opinion on Kinross Gold.
I don't own Kinross, but Kinross is another one of these sort of stocks that either goes up of its own volition or gets taken over. A whole bunch of decent assets, including a new Ontario asset to build. The stock has performed very well as a consequence of some good cost containment internally with regard to the company, good production growth, a good pipeline, and of course, good gold prices. It's firing on all cylinders. I don't own it. Obviously, looking at the stock chart, I wish I did.
Okay, we will leave it there. Let's move on to Jeff, calling from Stony Creek in Ontario. Hi, Jeff.
Oh, hi, Rick. May I have your thoughts on Largo, LGO? Thank you.
Thanks, Jeff.
I do own Largo, and I've been punished for that. Largo is in the vanadium business. I'm attracted to vanadium, both because of vanadium redox batteries, but also because of the growth worldwide in specialty steels. Largo is one of the few companies in the world that is cash flow positive in the vanadium business. And they started a business, much like the Sprott business, around physical vanadium. The idea being that rather than paying to store it, they would get paid to lease it. Thus far, those efforts have borne no fruit. I am a Largo shareholder. I'm down in my position. I continue to hold it because I love out-of-favor commodities. And I love out-of-favor commodities when the company that I own is cash flow positive producing them.
How long would you say you've held it?
A couple of years, I guess.
Okay.
2 years, 3 years. You know, many people don't understand resources in the sense that many resource theses are 3, 4, 5-year theses. And investors who don't have the courage of their convictions often get shaken out over a long weekend. My success has had to do with the fact that my timeframes are often consistent with the timeframes required to succeed.
It just sounds like you have more patience than most investors do.
It's very odd that at 72 years of age, I'm more patient than I was at 25. Then I had more time left on Earth. But the truth is that I've just learned over time that 5 years isn't an eternity, that it is an investable horizon.
Got it. All right, let's go to Richard. Richard is calling from Northumberland in Ontario. Hi, Richard.
Hi there. Hi, Rick. Skeena is in my takeover candidate section of my gold portfolio. Longtime investor in gold stocks. Do you have any recommendations for something with the qualities, the fact that it's financed and a rich deposit and large? Do you have any similar recommendations?
I don't. I think Skeena has to be built. I think that people are concerned about the deleterious elements in the ore. I don't think that's going to be a problem because the grade is so high that they'll be willing to accept the smelter penalty. And when the market sees that that mine can be operated and the concentrate can be sold and they can still make money irrespective of the penalties, either the share price goes up or the company gets taken over. I would also note that Skeena enjoys superb relationships with the host First Nations to the extent that the First Nations are both royalty holders but also shareholders and have great economic benefit agreements. In fact, the host First Nations, the Tahltan First Nations, have actually touted investors like me on the stock. That's really, really, really good local relationships, which says something about the management team at Skeena.
All right, Richard is on the line. We hope that helped you out. We are going to take a quick break. Rick Rule is sticking around to take more of your questions when we come back. Welcome back, and thanks for joining us. We're going right back to your phone calls. Anna is on the line. She's got a question today for Rick. Hi, Anna.
Hi, Rick. Your opinion on Orezone Gold as a company and as the resource. They just finished a private placement as well. So can you speak about that? Thank you very much, and I'll hang up.
Thanks, Anna.
I don't own Orezone. They appeared to me to be a fairly high all-in sustaining cost company. That turned out to be not correct. The stock has been punished because they're in Burkina Faso and the whole of the former French West Africa, but particularly Mali and Burkina Faso, have been punished as a consequence of political instability. I know the management team fairly well. I like them. I like the deposit, so I'm positively inclined. I was disappointed that there wasn't enough free cash flow from the mine that they were forced to do an equity financing, but the equity financing, I believe, cleared up the balance sheet. And I think, unless there's operational or political problems in Burkina Faso, that the stock will do better this year. I need to reiterate, however, I do not own the stock.
Got it. Okay, let's move to Justin on the line from Windsor, Ontario. Hi, Justin. What's your question today?
Hi, Rick. Just wanted to thank you for everything you do to educate us on the resource stocks. And my question was on Whitecap Resources and the merger with Varen and what you thought on it. And also, are you historically better off to add to your position prior to the merger or after the merger? Thanks. I'll hang up and listen to the answer.
Yeah, good question.
With regards to the second question, very often after the merger, in the sense that there are often people disappointed, the shareholders of the acquired company were often holding the stock just for a takeover, which means that they have an excuse to sell. Other people, with regards to the acquiring company, may be afraid of dilution. Very often, the immediate aftermath of a merger is a sell-off. In the case of Whitecap, it's a stock that I've been looking at for a long time and really attracted the Canadian oil and gas sector, tariffs notwithstanding. I was able to establish a new position in Whitecap as a consequence of the sell-off that accompanied the merger. I feel quite good about the stock, and I feel quite good about the Canadian oil and gas sector long term, tariffs notwithstanding. The fly in the ointment, of course, is that Canada's new Prime Minister, Mr. Carney, continues to be anti-oil and gas, which is paradoxical to me, given Canada's absolutely superb endowment with regards to oil and gas resources and oil and gas technology. The only fly in the ointment, I think, with regards to Whitecap and the whole Canadian oil and gas sector, is the perplexing inability of the Canadian political elite to understand the superiority of their own oil and gas business.
So you're worried, or is there concern that pipelines, which have been discussed a little bit more publicly lately, may not get built?
The fact that the political leadership of Canada doesn't understand the business case for Canadian oil and gas when you have lots of willing partners to buy it and you have lots to sell is just perplexing to me. It's very difficult to understand.
Got it. Okay, let's move back to the phone lines. Ash is calling from Grimshaw, Alberta. Ash, what's your question today?
Hi, I was wondering if I could have Rick's take on Hecla Mining and if now is a good time to take a position in it. Thanks a lot.
I don't own Hecla, but I need to say that Hecla traditionally has torqued the silver price. And silver generally has a run after gold has had a run. I'm not saying that a rise in the silver price is imminent necessarily, but if you do see a run in the silver price, you're going to see probably an increase in Hecla. There's a sort of a silver cult around Hecla. I need to say, as a consequence of ongoing production difficulties at the Lucky Friday mine, that I am not a Hecla shareholder, but I'm not indisposed to people who believe that they're going to see a fairly immediate run in silver to own it.
Got it. Okay, let's get to another caller. Gulam on the line from Toronto. Gulam, what is your question today for Rick?
Okay, I hold two silver stocks. One is the Abra Silver. The other one is Fortuna Silver, or Fortuna Minerals, I think they call it. Do you like both of those, and should I keep holding on to it for much further upside? I'd appreciate your opinion. Thank you.
Okay, let's take a
I'm
look
a shareholder of both companies. I'm a shareholder of Abra because they've made a discovery in Argentina, which I think is a profound discovery. You are in the part of the discovery cycle now where the drilling has become predictive, which is often a point where you get a real liftoff in reserve and resources, which I think is great. With regards to Fortuna Silver, now Fortuna Mining, it was simply oversold. They're having an expansion of the Lindero operation, which has some teething problems. It would appear that their West African operations are firing on all cylinders, albeit there is concern with global investors around ongoing issues with political stability in West Africa. Note that I own both stocks.
Got it. Okay, let's go back to the phone. Squeeze in John, who's calling from Edmonton today. John, what is your question?
Yeah, hi. My question for Rick is on Silver Bullet Mines. I'd like to hear his thoughts, and I'll hang up and listen to his answer. Thank you.
Okay, Silver Bullet Mines.
I'm not a Silver Bullet shareholder. I confine my holdings in most minerals to deposits that I think can be tier 1 or strong tier 2 deposits. Silver Bullet is a very small cap exploration company. To the extent that they enjoy exploration success, I think you'll see a very different share price. But I don't see anything in Silver Bullet that causes me to believe that they are on to a strong tier 2 or let alone a tier 1 deposit. So I do not own Silver Bullet, nor do I own very many of the quote silver hopefuls.
Okay, we do want to get to one last caller. Tom is on the line from Red Deer in Alberta. Tom, what's your question? Okay, we may have lost Tom, so let me put forward his question, which was about Sandstorm Gold.
I'm a Sandstorm shareholder. They made some mistakes 3 or 4 years ago with regards to the deployment of capital, particularly buying back shares and then needing to go to the market to refill their treasury at a lower price than they had sold the shares at, a fairly strong problem. I own the stock because I believe that they will be able to put Hod Maden in Turkey into production. And I think that the cash flow from Hod Maden will really change Sandstorm. The company was overly indebted, but in fact, they're using the free cash flow from their existing royalties to pay down that debt very rapidly. This is another one where there's a whole basket of royalties in place, and either the share price goes up or the company gets taken over by a larger royalty company that has a lower cost of capital. In either case, I expect shareholders to do well, and I am a shareholder of Sandstorm.
All right, good to know, Rick. Thank you very much. We are cutting the calls for today. We're out of time, but stick around. Rick is going to share his picks, his forward-looking top picks in a moment. Stay tuned. Welcome back. Rick Rule is our guest today, and he is sharing his top picks right now. The first one is Sprott Inc., trades on the TSX. Tell me about Sprott and why you like it, Rick.
I like Sprott because I believe that most investors need some help investing in natural resources. Sprott is a brand name for natural resources, being active in physical trusts and in equities management. A lot of people own precious metals or natural resources mutual funds, and they pay a fee for that. With Sprott, you get the same diversification, but they pay you a dividend as opposed to charge you a fee. That's pretty good math. Note, I'm a former a former director of Sprott. I am a large shareholder, I think the largest shareholder of Sprott. So there's substantial conflict of interest in this call, but I think it's a stock that basically every natural resource investor ought to own.
Okay, let's move on to Meteoric Resources. Tell me about Meteoric Resources. They're Australian?
Yes. Takes a lot more courage. Meteoric is an absolutely world-class tier 1 deposit, but it's a rare earths deposit. The market is bored of rare earths, and the market is nervous about Brazil. If I'm right about my thesis, and it'll take 3 or 4 years to know I'm right, this stock is a legitimate 10-bagger potential. I'm a very large shareholder of Meteoric, but this is another one that takes a lot of patience, and it takes a lot of tolerance for volatility. I like deposits that will be must-own deposits in the future. I like deposits that will be in the lowest cost quartile worldwide in the commodity they produce and will be in the best quartile worldwide in terms of return on capital employed, but at least 25%. And for me, Meteoric ticks all these boxes.
Okay, tell me why rare earths have fallen out of favor.
For one thing, the expectations around them were too high. For another thing, they're difficult to understand, and most investors want to feel as opposed to think. The third reason is that the Chinese are extremely efficient producers of rare earths and have produced them for lower costs than they can be produced at in the West. And this is where the thesis changes. The Chinese government and the Chinese people are less tolerant of the extraordinary environmental damage that is being done by rare earths extraction in far Western China. So the Chinese costs are going to rise, which will make Western production, but particularly Meteoric's production, much, much, much cheaper. The circumstance is changing, but not very many investors understand the dynamics around the rare earths market.
Got it. Okay, let's go to Africa Oil, which is your third pick for today. Tell me about Africa Oil. Where are they operational?
Two things to understand. Africa Oil is selling at a 50% discount to my assumption of its net asset value today, without factoring in any of the exploration upside in its primary theater of operations, which is Nigeria, or its secondary field of operations in Namibia. The second thing I like about Africa Oil is it enjoys the stewardship of the Lundin family, with whom I've done business for almost 50 years. Africa Oil is aggressively returning cash to shareholders, both by way of dividends and also by way of share buybacks. Management's faith in a company is demonstrated by the fact that if they're using their cash to buy back shares, it probably is a stronger indication of value than if they're issuing shares to raise cash. And in the case of Africa Oil is aggressively returning capital to shareholders at the same time they're strengthening their balance sheet and reinvesting in their basic business. Selling at half what I think they're worth, and I think what they're worth is going to increase too.
We are running out of time, but what do you like about the family? You mentioned you have a long history with them. I'm just wondering why you would put your money here.
The Lundin family has been serially successful in the oil and gas business. They built and sold 3 large oil companies. They built and sold several mining companies. Lundin Mining, which remains, and Lundin Gold are superior performers in the copper and gold business, respectively. And the company has two major copper gold discoveries in Argentina. I've done business with the family since 1974. And I need to say they have been successful time and time and time again. I did a lot of business with the grandfather, and I'm delighted to say I do business with the grandsons. A three-generational business that has been serially successful in the natural resource business. Wonderful, wonderful track record.
Got it. Rick Rule, we have to leave it there, sir, but thanks for joining us today. Appreciate that. We'll see you again soon.
Pleasure. Thank you, ma'am.
Let's take a look at the markets as we head out for the weekend. We'll be back on Monday, of course, but the markets here, TSX rebounding today, 335 points up, or 1.4%, just about. That's a good day. It dropped to 20 yesterday. The S&P was in correction territory yesterday at close. It's up 105 points today, or almost 2%. And the NASDAQ enjoying an up day as well by 417 points. Thanks for joining us here on Market Call. We'll see you again on Monday.